Okay, so I guess we have to start because this class will be over in 2 hours, in less than 2 hours now. So good morning, everyone. This our intensive class today is happening on the occasion of the sanitation happening in Lagos, so which restricted our movement.
Reachable or switched off. You can leave a voice message.
To everybody. Okay. So which restricted our movement. That's why we had to combine our classes. We are starting earlier than usual today. So today, we're going to be looking at or solving a question on published financial statements, which means it's not a separate topic, right? I'm not looking at a separate topic today, but rather we want to assess your knowledge on the totality of all the standards we have been teaching you so far. We want to apply them in the preparation and presentation of financial statements. And in my next 2 classes with you, I'll be solving like 2 or 3 of that. So I'll be solving that of like the 3 previous diets. The 3 previous diets where they have asked that as question 1. So it's usually what you're going to find in the question 1 of your exam. And we're going to be starting with that of last diet. And also, it might not be what they will ask you as question. So question 1 is about financial statements generally. So it's either the examiner asks you to compute or to prepare all these set of statements like we have here, this diet, statement of profit or loss, statement of changes in equity, and statement of financial position. Is that they ask you to prepare this set of statements, or they can also ask you for a statement of cash flows as question 1. So they have asked it severally as question 1, or they can ask you to analyze set of statements. They can give you the statements and ask you to analyze it. So your question 1 is always around that spectrum. That's where you should be looking at. And they have not missed it since 2020, 2019, since 2019. And the trend will not stop. That is what we're also going to be expecting this diet. So before I proceed, I need you to confirm that you can hear me clearly without any interference.
Yes, sir, we can hear you.
Okay, good.
We can hear you, sir.
All right, good. So good morning once again. You're welcome to this class. So when you are in the exam for this class, for this exam, first, I would advise that you go to the requirement of the question. Go to the requirements. Look at what the question is asking you to do. In this case, this question wants us to solve and prepare a statement of profit or loss and other comprehensive income for Ayoka Foods PLC for the year ended March 31st, 2024. They are giving us 12 marks. They also want us to prepare a statement of changes in equity for Ayoka Foods PLC for the year ended March 31st, 2024. 3. They also want us to prepare statement of financial position of Ayoka Foods PLC as of March 31st, 2024. Your answers and workings should be presented in the nearest thousands, 30 marks. So this is up to 30 marks, 13 plus 5, 17 plus 8, that's 25 marks. So apparently, aside this, there was an A part. where they ask you to discuss any two limitation of retrospective application of accounting policy by an entity. So I've taught you guys here, except for those of you where I'm not in charge of teaching you this, I hear it. But I think I taught this and I solved this past question for you. And I cannot overemphasize the need for you to learn all these principles because of questions like this. Discuss two limitations of retrospective application. So, I mean, the two limitations of retrospective application is the fact that it's the impracticability to determine period-specific effects or the prior period effects of some transactions. When you want to do retrospective application, the standard even acknowledges that there are limitations, which is the impracticability to go as far back as possible. That's a limitation. And number two is non-availability of data to make previous year adjustments. That is also a limitation of retrospective application. Then explain a few things on them. Very brief explanation. That would earn you your 5 marks. That's IS 8. So again, FI is not about workings. Yeah, there are workings there, but knowing the principles pays. Now, having seen that, what this question wants us to do is for us to prepare some set of statements. I was given my trial balance. So for your exam, you can glance through this trial balance. You can see items on them. Like we have here, they give me equity shares. I can see that this equity is at 50 kobo each, 84,000 naira. If I need to compute maybe dividend, or I need to do anything that has to do with share capital, and I have to convert this value to number of shares, I will know that I will need to do 84,000 divided by 0.5. So you don't assume that the nominal value of share capital is always 1 naira. It is not. Also, I can see that I was given convertible loans here. So I know that I will have to deal with compound financial instruments. If you remember, we taught you that. And again, I can see some set of assets, their cost, their accumulated depreciation. I can see they give me current tax. If you remember at all, the principle we taught you here, you would understand that this current tax you find in the trial balance is an over provision for tax. The balance, when you find current tax in your trial balance, it's either an under provision or over provision for tax. In this case, if it is on the credit side, it is an over provision for tax. It's happening, it's like a brought forward from last year, it's like a balance because taxes are usually settled on a preceding year basis. The tax of last year will be settled this year. So usually when you make provision for your taxes and the taxman comes, you will find out that what you have computed or what the taxman have computed will be at variance with what the tax authority will ask you to pay when they come for their desk review. So there's always that shortfall. Is either you have over provided or under provided. So if you had over provided, you will see it sitting down on the credit side of your trial balance. It's a balance. It's like an amount that you are expecting like a refund for or something like that. You over provided. If it's on the debit, that means you have under provided for that. In this case, it's on the credit you over provided. So if you're able to do this set of analysis in the exam, good for you. The deferred tax, as we have it here, is it will represent the opening deferred tax. When you see deferred tax in the trial balance, it represents opening deferred tax from last year. So deferred tax is usually estimated at the end of every year. They are determined with at with closing values, with balance sheet values. So we so when you find one in the trial balance, know that that is the opening deferred tax, because deferred tax is something you do at the end of the year. So for the current year, you're not finding in the trial balance. You can only find it in the additional information, because it's not within the transaction that happened within the year. Now, I was given closing inventory, but now I can see that this closing inventory is as at April. Okay, I'll be curious to see that note 5, because the year end of this company is March 31st, 2024. So it's not possible, it's not possible for them to then give me inventory as at April. Something is wrong. I'll need to look into that. Otherwise, I will walk it back to 20 March 2024. Then there is receivables and all that. Then there are other items, and I can say. Okay. Another thing I needed to point out is this loan interest paid that you find in the trial balance. The loan interest paid that is here on the trial balance. So as it's written clearly for you here, it's paid. When you find interest in the trial balance, it means the interest that has actually been paid, that they have paid in cash, not accrued interest. It's the interest they have paid. You need to have that understanding too, as far as loan interest is concerned. Okay, so I just looked through, then I stepped into my additional information. I want to read through first, then I will start trying to see what I can do with them. Now, something about additional information is this. They are in two categories. Additional information are in two categories. So the first of them is that they are going to be giving you more information about the figures you have in the trial balance, more information. So what you need to do with them is to use your understanding of that additional information to adjust the figures in the trial balance, to update the figures in the trial balance. That's one. Number two, it gives you new information that have not been captured in the trial balance. New information that have not been captured in the trial balance. So really, what we want you to do is to properly update and capture these items that are given in the additional information. Now, in everything you do with this question, except if you have seen those additional information before, have it at the back of your mind that you don't have eternal time, meaning that you don't have all the time for this question. Don't sleep on it. Like this question now in the exam, you have just 45 minutes. You have just 45 minutes. And I will show you the breakdown of how marks are allocated, so that we don't want to hear a story about, I did not finish. It's because you spend all your time in question one. Sometimes I advise my students that don't start from the question, because it can take a lot of time. It will take a lot of your time thinking about how you want to make those adjustments. Any adjustment that you feel you don't know how to adjust, move to the next adjustment. I mean, in all you do, make sure you prepare that statement. Even if you leave all your additional information and use this guy to prepare your statements, it hands you something. Out of the 25, probably maybe you will have gotten close to half. But if you can do 1 or 2 or 3 additional information, it boosts your mark to, out of the 25, it takes you closer to 20. But at least don't get less than half. And that would only happen if you make sure you prepare your statements. Now let's look through it. The first one says that an ordinary dividend of 5 kobo per share was paid in November 2023 and charged to retained earnings. Additional information 2 says that the 8% for the 5 million convertible loan note was issued on April 1st, 2023 at par. Interest is payable annually in arrears on March 31st each year. The loan note is redeemable at par on March 31st, 2026 or convertible into equity shares at the option of the loan note holders on the basis of 45 ordinary shares for each 150 naira of loan notes. We're told that Ayoka Foods Finance Director has calculated that to issue an equivalent loan with no notes without the conversion rights, it would have to pay an interest rate of 10% per annum to attract investors. The present value of 1 naira receivable at the end of each year based on discount rates of 8% and 10% are, so we're given the discount factor for each discount rate. 3, non-current asset, says on April 1st, 2023, Ayoka Foods decided for the first time to value its freehold property at its current value. A qualified property valuer reported that the market value of the freehold property on this date was 120 million, of which 45 million related to land. At this date, the remaining estimated life of the property was 20 years. Ayoka Foods PLC does not make a transfer to retained earnings in respect of excess depreciation on the revaluation of its asset. Plant is depreciated at 20% per annum using reducing balance method. All depreciation of non-current asset is charged cost of sales. The balance on current tax represents the under or over provision for tax liability for the year ended March 31st, 2023. The required provision for income tax for the year ended March 31st, 2024 is 29.1 million. The difference between the carrying amount of the asset of Ayoka Foods, including revaluation of the property in Note 3, and their lower tax base at March 31st, 2024 is 40.5 million. Ayoka Food PLC Ayoka Foods PLC rate of income tax is 25%. The inventory of Ayoka Foods was not counted until April 1st, 2024 due to operational reasons. At this date, its value at cost was 54 million, and this figure has been used in the cost of sales calculation above. Between the year end of March 31st, 2024 and April 4, 2024, Ayoka Foods received a delivery of goods at the cost of 405 million and made sales of 11.7 million at a markup on cost of 30%. Neither the goods delivered nor the sales made in this period were included in Ayoka Foods purchases as part of cost of sales or revenue in the above trial balance. 6. On March 31st, 2024, Ayoka Foods factored trade receivables with a book value of 15 million to Anike Limited. Ayoka Food received an immediate payment of 13.05 million and will pay Anike Limited 2% per annum on any uncollected balances. Any of the factored receivable outstanding after 6 months will be refunded to Anike. Ayoka Foods has derecognized the receivables and charged 1.95 million to administrative expenses. If Ayoka had not factored these receivables, it would have made an allowance of 900,000 against them. and we are told to requirement. Okay, so I've done my first reading. Now I want to go back then. As I was reading it, my mind was following. And with that, as a student, there are some I will say, I know how to adjust this one. There are some I'll be, I don't know how to adjust this one, but I just want to see everything at a glance first. Now, let me now come and be truthful to myself. Do I know how to do this? Anyone I don't know, I will just move forward. As a student, I'll just move forward. I don't want to waste all my time on this one. So I can prepare my statement. So number one says an ordinary dividend of 5 kobo per share was paid in November 2023 and charged to retained earnings. So they paid dividend in November 2023 and they have already charged it to retained earnings. So when is November 2023? Since the year end is March 2024, so November 2023 is during the year, right? They pay dividend and they already charged to retained earnings. So what you need to do here is this. They should not charge it to retain earnings. You are not supposed to charge it to retain earnings. This 2,100 should be my opening retain earnings. This retain earnings here, what I want to see here is my retain earnings at the beginning of the year, which is April 1st, 2023. But since they have charged dividend to these retain earnings, it therefore means that this retain earnings here is as at when did they charge it? It's as at November 2023. So they should not charge it. When you pay dividend, it's like you're paying money. You credit bank, you debit dividend, which I'm going to take to my statement of changes in equity and deduct from opening retained earnings. That's the sequence. That's how it works. When you pay dividend, you credit bank, you debit that dividend. So that dividend is, I should have seen dividend on the face of this trial balance as a debit, but rather they have used it to net off retained earnings. No, it should not be so. So what I need to do is to remove it from that retained earnings. Let dividend stand separate. And that's all I need to do here. Let me do that. Thank God I can do that one. So, additional information one, dividend paid. So how much is the dividend paid? I'm told it's 5 kobo per share. So 5 kobo is equivalent to 0.05 per share. How many shares do I have? I think I explained that when I was scanning through my trial balance. It's the first item on the trial balance. The value is 84,000 and the nominal value is 50 kobo. So if I want to get the number of shares, it's just 84,000 divided by 50 kobo. So 84,000 divided by 0.5. I'll need you to bring out your calculator. We're going to need it here to also demonstrate that you're participating. So can you give me the number of shares?
168,000.
168,000. Can you multiply that by 0.05?
84,000.
No, it won't be 84,000.
I'm not using
0.0.
Yeah.
0.05, that should be 8,400.
400, yeah.
Now, remember to put this because the examiner, if you look at the last note they gave us, that the answers and workings should be presented to the nearest thousands. They are not joking. They mean what they are saying. If you don't put this thing I just put here, and you just go ahead and write 8,400, you are wrong. Your figure is wrong. You might get marks for methodology, but your figures is wrong. So ensure you remember to do this. So what you're going to do now is I'm not going to do debit this, credit that. It doesn't earn you any mark in the exam. What we want you to what we want you to understand is what adjustment are you making? So with this 8.4, I'm going to add back to retained earnings. So add back to retained earnings. They should not have deducted it from retained earnings, from opening retained earnings in the first place. So I'm going to add back to my opening retained earnings so that it stands separate. Add back to retained earnings. So the dividend can stand as a separate line item in the trial balance. So what's my retained earnings as per that my trial balance?
2-1.
2-1. How much is the dividend paid?
8-4.
What's the addition of the two?
10-5.
So this is like my dividend, my retained earnings at the beginning of the year. I've taken it back to the beginning of the year. I said it's 10,500. So that's what I need to do for that note 1. I'm done. I know exactly what I need to do. So all I need to do is when I'm preparing my statement of changes in equity, this will then be my opening retained earnings. Remove dividend. I will still come back to this, but this will have given me like a mark or so in the exam for doing this separation. Now, let me go to additional information too. This talks about 8% 45 million convertible loan notes was issued on 1st April 2023 at par. So I'm always bothered. I always want to have it at the back of my mind when a financial instrument is issued, because the date it is issued will affect the interest that will be paid. If it is issued at the beginning of the year, fine. That means the interest that is set to be paid is for a full year. If you can somebody do 8% of 45 million for me, just quickly do it. Let's see what you will get.
3.6.
If you go and check that interest that I told you in the trial balance, that's whenever you see it in the trial balance, it means it has been paid at the end of the year. You see that it's 362. This is loan interest paid. So apparently it relates to this loan that was issued. You know that if this interest was issued during the year, whatever time during the year, what you will have done is to prorate relative to the number of months. If it was paid, if this instrument was issued in, let's say, June, that means they will not pay interest for the whole year. Since it was issued in June, it's from June to March. Like that. That's how it works. You'll have prorated it relative to the number of months remaining till the end of the year. Now, we're also told that interest is payable annually in arrears on March 31st each year. So they pay interest at the end of the year. Okay, this also confirms that that interest you're seeing in the trial balance is paid. They have paid it. They also said that the loan note is redeemable at par on March 31st, 2026, or convertible into equity shares at the option of the loan note holder on the basis of 45 ordinary shares for each 150 naira of loan notes. This is telling us that the term of this loan is 4, 5, 6. It's 3 years. It's either the investor or the loan note holder collects back his money on March 31st, 2026, or he converts it into shares, and they are giving us the number of shares he will get. They are giving us the number of shares he will get. You don't need the basis of conversion. You don't need it for our workings. It only confirms that the loan note holder will get a fixed number of shares, which goes back to the way I taught you in class, that when you have a convertible loan note or a convertible debt, that this is a compound financial instrument. And this instrument, because the issuer does not know whether the loan note holder will ask for his money at maturity or will be ready to convert to shares. The issuer does not know. As you can see, they told you in this question that it is at the option of the loan note holder. He's the one that will decide. So the issuer does not know. And I told you that in that case, IS 32 says that you're going to treat this instrument as both a debt instrument, that is a financial liability, and an equity instrument. You have to bifurcate, you have to separate the 45 million into financial liability and debt. And I showed you how to do that. It's not different from exactly what you need to do here. Now, they went ahead and said that Ayoka Foods PLC Finance Director has calculated that to issue an equivalent loan note without the conversion right, it will have to pay an interest rate of 10% per annum to attract investors. So they are giving us the market rate. They are giving us the rates the issuer will have paid if he had not given the option for conversion. That's the market rate. And you see that this rate is higher. Yes, it is higher because it has more risk. For this issuer, Ayoka, to be allowing investors to be able to convert is reducing their risk. I mean, in case he cannot settle, in case he cannot raise the money to pay them back, the investor knows they can convert to shares. That's a comfort. And that's why they're able to accept 8% from him. Without that conversion option, nobody is going to accept 8%. It's 10%. That's the market rate. Now, we're told that the present value of €1 receivable at the end of each year, based on discount rate of 8% and 10%, are as follows. Yeah, this is a standard question. An FR question will not be asking you to be calculating discount rate. They should give you. This is not FM, this is not PM. They should give you in the exam. So they gave us discount rate at 8% and at 10%. Now, they are giving you this because you will need to discount in order to get financial liability value. You will need to do some discounting to present value. You will need to do some discounting to present value. And you have to use the market rates. The examiner is setting a trap for you. They gave you both the discount factor for the 8% and also for the 10%. If you go and use for the 8%, you're wrong. You have to use the discount factor for 10%. So let's quickly solve this. Convertible loan notes. I always remember to put mine. This is sufficient. It covers all your working underneath it. So the first thing I will do is for me to separate the loan notes into financial liability and debt instrument. So I need to get value of financial liability at the beginning of the year, which is 1st April 2023. And to do that, I will get the present value. So let's say these are my cash flows. Discount factor at 10%, Then I get my PV. So in the first year, March 2024, I will get the present value of my interests, and my interest is 3,600. I confirmed it. Let me just, some of you will not remember. So it's this 3,600. So ordinarily, I should have used annuity. If I want to get present, because this interest is interest for year 1, year 2, year 3. This is a 3-year term loan. Since it's going to be redeemed at 2026, so it's a 3-year term loan. Redeeming means they will pay it back to the investors. So, but the examiner gave me the discount factor year on year. So, what's the discount factor in year 1? 0.91. So, I'm using the 10% discount factor. So, 0.91. So, in 2024, another 3,600, and that would be 0.83. 0.83. And this 2025. And in 2026, this is 0.75. And also, I will also get the present value of the principal repayments, also at the maturity date, using the 0.75. So let me just put iPhone instead of putting it in brackets so it will not confuse you. So can you get me the present value of each year?
3276.
Okay, year 2.
2988.
2988. Am I correct?
Yes, sir.
Year 3.
2700.
Or the principal.
33750.
33750. So let's get the value of the financial liability. Can you sum all together?
42716.
42716. So how much is the sales proceeds? How much was the value of how much did we borrow? 45 million. The balancing figure,
2284.
and that's the value of my liability component. So that's at the beginning of the year. So at the end of the year, at March 2024, my financial liability would be financial liability value using amortization schedule. In 2024, balance brought forward. What was the balance brought forward? 42716. Interest payable at the effective interest rates. This will be 4272. Interest paid at 8%. 36, which I will deduct. Balance carry forward. If I accumulate all these three together, this plus 4272 minus this, how much is that?
43388.
43388. So now in all I've done, this is all I need for my statements. Number one, these equity components will show as other component of equity. Will show in my equity when I'm doing my statement of changes in equity and when I'm doing my balance sheet value. One. Number two, this interest now is the interest that will be recognized to P&L, not the 3.6 in the trial balance. This is the interest that will be recognized to P&L. While this amount is the balance that will show as my non-current liability as convertible loan notes. And that's it for this adjustment. Yeah, please go ahead and ask a question.
Sorry, please, why are we discounting it, this value? I don't understand.
Okay. You're from Isola, right?
Yes, sir.
Okay. Have you been taught financial instrument? Compound financial instrument?
No.
But you did financial instrument generally.
No.
Okay. Okay. You guys have to be taught. So the reason we have to discount it is that the value of the loan notes is 45 million. That was what we issued. And the standard requires that you need to separate the loan notes into financial liability and equity components at the date of issue because of the fact that it's a convertible loan note, the fact that it can be converted to shares and all that. So it has a component of equity in it. So we need to do that separation at the date of issue. So the convertible loan note of 45 million needs to be separated into debt and equity. And we need to get the value of the debt instrument first. The financial liability component of it, we need to get it first. While we will get the equity component as the balancing figure. So equity is always gotten as balancing figure because according to the conceptual framework, equity is a residual interest. So it makes sense to get it as the balancing figure. For you to get the value of the liability, because we are trying to get the value of the liability today. So the practical way to do that is just to get the value of the cash flow element in that liability today. Because the worth of a liability is not beyond the interest you are going to pay, and also the principal you will pay. That's what you owe. That's your liability. So if you want to get their value today, just discount them to present value so you can see their value today. And that's why all the interest you're going to pay, you discount it to present value. The principal you're going to pay, you convert it to present value. You get their value today. And that's why we are discounting them to present value, because we want to get the value of the liability today, which is 1st April 2023 at the beginning of the year. And that's how we're able to sort out the value of the liability. Then compare that with how much you actually borrowed so that the balancing figure will give us the equity component. Did I help you?
Yes, sir. Thank you, sir.
Okay. Yeah, another question.
Good morning, sir. I think
Hi, how are you?
addition of the PV is 42714, not 42716.
Oh, okay. No material, let's just leave it. It's too narrow. I've used it in a lot of places that I cannot start changing it. But thank you anyway, Dami. Any other questions? Please ask your question, Messi. Go ahead.
Hello, sir. Can you hear me?
Yes, please. Can hear you.
All right. So I want to ask, is this the way this question will be for every questions? Like, is there another way it's can come? If, for example, this particular convertible loan quotes, will they always bring it with the disparaging figure?
I didn't really get your question. I didn't get your question very well.
Okay, so my question is this the way this question will be in the examination, in the during the exams? Or is there another way they can bring this question, like, for example, to twist the students to twist the question so that the students might not get the question? So that's what I'm at.
Okay, I get you. So there are different ways they bring it. This is not the only way you will find it in the exam. They bring it in different ways. So, like I'm going to solve 3 diets with you. And this is the first one. I'll solve 2 more. If you have more time, even 3 more. So that you will see different varieties. For those people that have solved a previous diet, maybe that would have helped you in this diet also, in some additional information. So, but this is like the first time they are bringing an additional note on convertible loan notes. They don't usually bring it. Like last diet or last 2 diets, they brought leases. They don't usually bring leases before, but we saw leases in the additional notes. So all you need to do is just to know all those standards that I've been teaching you, just for you to know them. When you know them, then you won't have any problem. You won't have any issue. So it's not always like that. Okay, I don't know if the class governor of Isolo student is here. So I just checked my course allocation now. Mr. Ibrahim is supposed to take you financial instruments, and he hasn't done that. So speak with him. Whatever it tells, I don't know if he's coming this weekend. Tell him I said he should take you financial instrument. Whatever it tells you, let me know. Financial instrument is so important that you would not take. It's so important. If you're not going to take any other thing, it's not financial instrument. It's like 7% of the allocation that we gave him. So it's material. Any other question? Okay.
Good morning. Mr. Asif, please, before you go on, sir.
Okay.
Year 2026, that we charge 45,000 naira again. Is that the rule to calculate the convertible loan note, or based on this question, that's the reason why we are charging the 45 million again?
Are you talking about this one?
Yes, sir.
Like I've explained severally, because I've explained it severally. We're trying to get the value of the financial liability. So again, I mean, to answer your question directly, this is how you always do it. Okay? This is how you always do it. When you want to get the value of the financial liability. And all we are doing is we are getting the present value of the interest and the present value of the principal. Okay? This 45,000 is the principal repayment at maturity. You want to get what's the value of that today? So you need to discount that also to present value.
All right.
Right?
All right, sir.
Yeah,
Thank you.
that, yeah. So you always do it like that every time.
Okay.
Any other question? Any other question? Okay. So that means I'm permitted to move to note 3. I'm done in note 2. And I mean, the idea is not just to be working. You will notice that as soon as I finished my workings, I know exactly what I needed it for. I know that this guy, I need it at the end of the year. The value does not change. It goes to my equity. From this amortization schedule I did, my interest payable, the effective interest, I know I need it. It's going to finance cost, P&L. And this value at the end, that's the value of my loan notes, my convertible loan notes in my statement of financial position. I already know what I need. So when I'm doing my statements, I can just punch and put them where they belong. Okay, Oluwafemi, you can ask a question, please.
Good morning, sir. Can you hear me, sir?
Yes, can hear you.
So, on the other part that you just finished calculating, please let me stroke to that part, the last part. So I need to understand the interest payable at 10% and the interest paid at 8%. You know, you said in the discounting rate they give to us, we are going to be using the 10% alone and not the 8%.
That's
Can you
correct.
help us explain that part so we mistakenly pick the wrong one?
Okay, all right. So again, whenever you are given effective interest rates, that is the interest rate you would use if you have to do discounting, and it is that interest that you calculate on that basis that goes to P&L. When you're taught financial instrument fully, for those of you that have not been taught, I don't know whether you're from Isol or whether I've taught you guys, you would know that these effective interest rates already includes this. In fact, this effective interest rate is these interests plus premium. So it's the market rate. When you see effective interest rates, that's the market rate. And that's what you use for discounting. That's the interest that goes to P&L and all that. So by deducting this one means that, okay, out of this, so we have paid this. So the balance is what increased this to this amount. So always have that at the back of your mind that we work with market rate for presentation purposes, for discounting purposes, and all that. I don't know if that helped you.
Yes, sir. Thank you.
Okay, good. All right. So I can move to note 3, which talks about non-current assets. So it says on April 1st, 2023, Ayoka Foods decided for the first time to value its freehold property at its current value. A qualified property valuer reported that the market value of the freehold property on this date was 120 million, of which 45 million related to the land. At this date, the remaining estimated life of the property was 20 years. Ayoka Foods PLC does not make a transfer to retain earnings in respect of excess depreciation on the revaluation of its asset. Plant is depreciated at 20% per annum using reducing balance method. All depreciation of non-current asset is charged to cost of sales. Okay, now this is another additional information, and it's talking about two things: revaluation and depreciation. That's all I need to sort here. So I can see from here that at the beginning of the year, I revalued my property. I revalued my property to 120 million. And out of these 120 million, 45 million relates to land. 45 million relates to land. So whenever you are given that, at the date of that revaluation, you need to compute revaluation surplus or revaluation deficits. That you need to do first. When you have done that, then you can do your depreciation and all that. Now they moved on. They said at these dates, the remaining estimated life of the property was 20 years. This will help you compute your depreciation. You're not told that Ayoka Foods PLC does not make a transfer to retain earnings in respect of excess depreciation on the revaluation of its assets. Good enough. They have made your life easy with this statement. Okay. The examiner can also tell you that they make a transfer to retain earnings in respect of excess depreciation. No issue. It therefore means that you will need to do a transfer from revaluation surplus to retain earnings. And I taught you how to calculate the transfer you will do. It's just to get your revaluation surplus divided by 20, divided by the remaining useful life. That will give you the amount of excess depreciation that you transfer from your revaluation surplus to your retained earnings. Furthermore, I was told that the plant is depreciated as 20% per annum using reducing balance method. So you need to know how to calculate depreciation using reducing balance method. I taught you this. And remember that you should charge all depreciation to cost of sales. Now, I know exactly what I need to do here. As I'm reading them, my mind has constructed what I need to do. And it's constructed it with the sequence of the question. The question firstly told me about the revaluation that happened at the beginning of the year. And I know that whenever they tell me about revaluation, only one thing will happen: revaluation surplus or deficit. I would determine that. And it's been determined at the dates that evaluation took place. When I'm settled with that, the next thing I'm doing is for me to compute my depreciation on all my assets, and I'm done. So let's get that done. So this is speaking to non-current assets. First, let me deal with my freehold property. So at April 1st, 2023, I will compute my revaluation surplus or deficit. Put it in. So I was given the fair value of the two assets as 120. I will compare that with my carrying amount. And my carrying amount is costs of the assets. I will get that for my trial balance. What's the cost of these assets? Freehold property. What's the cost of this asset? And anyone said?
11 to 500.
Okay, 112,500. Deduct the accumulated depreciation on this asset, on the freehold land, freehold property. The accumulated depreciation at the beginning of the year, can you see it? 36,750. That is it on the credits. 36,750. That's the accumulated depreciation. 36,750. So what's my carrying amount?
75750.
Me go.
75750.
750. So what's the difference? Okay, I can see your hand, Femi. Please go ahead and ask your question.
Sir, please help us check the question back. I think we picked the cost for land, and I think we picked the cost for land, and we picked the depreciation for plant and equipment.
Okay. Thank you, Femi. Yes, Femi, thank you. It should be 15,000. Should be 15,000. Thanks. So how much is this then? This will change.
$97,500.
You see that if Femi had not corrected us, what would have happened is that we'll have continued. And at the end of the day, we'll find out that our account is not balancing. Do you know what I will do? I will move on. I'm not even going to be bothered because it won't affect me much. For financial reporting, it doesn't affect you much. What the examiner marks, the examiner will know you have made a mistake, right? The worst that can happen, maybe I will lose half a mark. It won't start canceling all my methodology. No, it won't. I get mark. I will show you the scheme when I'm done.
22,500.
22,500. So, having done that, I can then do my depreciation for the year. And how do I do my depreciation for the year? Since they have revalued the assets, it will be based on the revalued amounts. Revalued amounts. I will divide it by the remaining useful life. And what's the revalued amount? You can see that it's 120. But you know that out of this 120, there is land. And we don't depreciate land because it has an unlimited useful life. Don't ever, and by now, if you see that we don't depreciate land because it appreciates in value, you're on your own. No. It's because it has an unlimited useful life, so we can't depreciate it. And the value of the land here is, they told us in the question that it's 45. So I need to remove it. And I was told that the remaining useful life is 20. Understood that the remaining useful life is 20. So that gives me the value. Can somebody then confirm that? How much would that give us?
3,750.
Sorry?
3,750.
3,750. So I can then get the carrying amount of the freehold property. So what's the carrying amount of the freehold premise property? I will get the fair value at the beginning, which is 120. Then minus the subsequent accumulated depreciation, because all the previous depreciation will have been cancelled out. They would have been cancelled out. It's 3,750. So what's the balance at the end?
116,250.
116,250. And this is my depreciation and my carrying amount. So I'm done with these assets. So I move to the plants. There was nothing much on the plant other than for me to calculate my depreciation for the year. So the cost of the plant, how much was the cost of the plant? The cost of the plant was 111,750. The cost of the plant is 111,750. The accumulated depreciation is, I think it's 36,750. Let's confirm.
Yes, sir.
Okay, yes. 36,750. So what's the carrying amount at the beginning? Because this is the opening. What was the carrying amount at the beginning?
5,000.
65,000.
75, sir.
75.
Okay, 75,000. Then they want me to compute my depreciation using reducing balance method. So using reducing balance method, I just calculate my depreciation on this carrying amount at the beginning. So I will just do 20% of 25,000. Let me confirm that it's 20%. Yes, it's 20%. You got 15,000. So what's my carrying amount at the end?
50,000.
Is it 50 or 60?
60, sir.
Okay. You know that if this question, I've told you that depreciation should be calculated on straight line basis, and we are given a rate of 20%. This depreciation will have changed. This depreciation will have been 20% times this cost. It will have become 20% times the cost. It will have changed. So you need to be very careful with that. Okay, so that's all for that additional information. Let's go to the next additional information, which is additional information 4. It says the balance on current tax represents the under over provision of the tax liability for the year ended March 31st, 2023. The required provision for income tax for the year ended is 29.1 million. The difference between the carrying amount of the asset of Ayoka Foods, including the revaluation of the property in notes 3 above, and their lower tax base is 40.5 million. Ayoka Foods tax rate is 25%. Okay, so here now, I need to deal with taxes. I was given my current tax, and the examiner acknowledged what I explained to you earlier, that the current tax in the trial balance, it represents under or over provision for tax. So they didn't tell you whether it's over or under. But you should know that since the current tax, this 1,200 is on the credit side, is an over provision for tax. Is an over provision for tax. And I would need to make some adjustment to that. So let me deal with my current tax first. That's note 4. current tax. So as for my trial balance, let me not start with as per trial balance. I have estimate of tax for the year, estimate of current tax. I was given at 29, is it 29,700 or 29,100? I think it's 29,100. Yes. Note 4, it's 29,100. That's my estimate of tax for the year. This is my liability, the tax I have to pay for this current year. And adjustment for last year, there was an over provision last year. Stored is 1,200, so I will deduct because it's an over provision. Then my current tax expense, what will go to my P&L for this year? How much is that?
27,900.
27,900. So this is what I will take to my P&L. Why this other guy is my liability for the year? Because that's my tax for this current year. This over provision is happening from last year. It's just an adjustment against last year. And this figure would be recognized as a deduction from this. Whatever balance we have goes to P&L. Also, my deferred tax. For my deferred tax, I was told that they said the difference between carrying amount of the asset of your car, including the revaluation of property, note 3 above, and their lower tax base, I was told is 40.5 million. So in this case, the major challenge you would have here is for you to know whether this 40.5 million is a taxable temporary difference or a deductible temporary difference. Does anybody here knows this 40.5 million, is it a taxable temporary difference or a deductible temporary difference? Temporary difference. Sorry?
Sorry, please could you repeat the options?
This 40.5 million, is it a taxable temporary difference or a deductible temporary difference?
A temporary taxable difference.
It's not temporary taxable difference, it's taxable temporary difference, right? And that's correct, okay? Because the deductions you are getting is lower. The tax base is lower. The deduction you will get is lower. They said, and they are lower tax base. Okay, so that means you will pay more tax in the future. Since they said the tax base is lower, so as far as it is an asset, so it's a taxable temporary difference of 40.5 million. So we have a taxable temporary difference of 40.5 million. Taxable temporary difference will lead to deferred tax liability. And since I was told that the tax rate is 25%, so what does that give me?
11 to 50. No, sorry. I want to do
What will give you
what's
a
it?
conflict on that?
10, 1 to 5.
9125.
How am I getting different figures now?
1 0 1 to 5.
So this is my deferred tax at the end of the year. This is my deferred tax that will show in the statement of financial position. I will compare that with the opening deferred tax. You'll find that in the trial balance. That's how much?
3,900.
3,900. Compare the two. So in this case, there's an increase in deferred tax for the year. So this will go to my P&L as deferred tax expense. So what's the difference? 10,000 minus 3,900.
6225.
It goes to my P&L. So my income tax expense in my P&L is the aggregation of my current tax expense, which is 27,900, and my deferred tax expense, which is 6225. So what's the addition of the two? What's the addition of the two?
34 1 to 5.
34,125. This is what goes to my P&L. 34,125. Everybody here has been taught income tax. Every one of you here. Or is there anybody, any of you that has not been taught deferred tax? Okay, that's a relief. Now, let's go to the next additional information. It says the inventory of Ayoka Foods was not counted until April 1st, 2024 due to operational reasons. At this date, its value at cost was 54 million, and this figure has been used in the cost of sales calculation above. Between the year end and April, Ayoka Foods received a delivery of goods at a cost of 4.05 million and made sales of 11.7 million at a markup on cost of 30%. Neither the goods delivered nor the sales made in this period were included in Ayoka Foods purchases as part of cost of sales or revenue in the above trial balance. What do we do here? Is there any one of you that can try this one? What do we do here? So the first thing you need to identify here first is the fact that they counted the inventory after the year end, which is April 4th, 2024. That wouldn't have been a problem, right? The problem was now that between the year end and that date, they have received and sold some goods. That's the major challenge. They have received and sold some goods within that period. And that's the challenge. So that means, the cutoff, there's always a cutoff date. And as far as you are concerned, is the year end, is March 31st, 2024. So the inventory value we want to have is the inventory as at the year end, March 31st, 2020, except if you are told otherwise. is March 31st, 2024. That's the inventory value we want to have. But now they have included inventory of the next year. We need to make adjustment for that. And that's basically all we need to do here. That's basically all we need to do, because the sales and purchases, those ones are next year sales and purchases. I have no issue with that. They are not going to be recognized this year. They are recognized next year. So, but the inventory is already received and taken. So, and what they told us that they went to do inventory count. So they counted those new inventory that they bought in the new year. We need to adjust for that. So all you need to do is that this 54 million that we have, which they have also used to compute our cost of sales. That means our cost of sales also needs to be adjusted. So here now we need to adjust inventory, we need to adjust cost of sales. So what are we doing? They received 4 million worth inventory. Okay, that means 4 million worth inventory has been added to 4 million worth of inventory has been added to my inventory. So I need to remove that. I have to remove that 4 million inventory that was added. And also, I have taken out 11.7 million. I've made a sales of 11.7 million. That also means that I need to add that back. I need to add that back. But this is where you need to be careful. What I'm adding to inventory cannot be this 11.7 million, because this 11.7 million is not the cost of the inventory. I need the cost of the inventory, because inventory are measured at the lower of cost and net realizable value. The net realizable value is this 11.7 million apparently, because they told me they usually sell at a markup of 30%. So there's a markup of 30% here. So with a markup of 30%, I will need to work back to cost. I will need to get the cost of this inventory. I will need to get the cost of this inventory. So, and to get it is just, it's actually 100 over 130 times that 11.7. That gets me what I need. Let me show you. So this deals with inventory. Now, so the inventory includes items from the next year, and this needs to be adjusted. The purchases of 4.05 million will be removed from inventory, while the sales, while the costs let me write it easier. Why the sales of 11.7 will be added back at its cost value. So that's all we need to do here. So let me get the costs of the sales of 11,700. So since the markup of 30%, so that means this 11,700 is like 100 plus 30. Okay, so this 100 is the cost, this 30 is the markup. With this equation, I can get, it's like which is equivalent to this 100 is costs. This 30 is markup. Here I can get markup, I can get costs if I want to, however I want to. So for me to get the cost component, I just do, which is the 100 divided by the total on 30 times 11,700. I don't need, if I needed the markup, it would have been 30 over 130 times 11. So can you give me the cost? How much is the cost?
9,000.
So I've gotten the cost. So my inventory at the end of that year so as per my trial balance, I think it was 54 in the additional information. I would remove the purchases, the 4050, the sales at its costs. I will add it back, 9,000. So what's my inventory value?
58,950.
So that means the inventory will now be increased by how much?
By 4,950.
So for my double entry to be complete, otherwise my account will not balance. So this will also, will it be, let's think, if closing inventory is increased by 4,950, what impact will it have on my, okay, to reduce? Because closing inventory is like an income, is a potential income. So to reduce, this will also reduce cost of sales by 4,950. Let me just put this here. Okay, that's all. So in all, it's like I'm debiting inventory with this amount, and I'm crediting cost of sales with this amount. So my double entry is complete. I'm still on track. As I'm working it, I'm using my head to monitor my debit credit. That is it intact. If it's intact, no issue. Any other question? Okay, let's go to the last additional information. Now, it says that on March 31st, 2024, sorry?
Yeah, mine was not going to be a question. I'm just going to ask you how many marks is this question? But I see that it's 30 marks.
It's 20, it's 25 because there's an A that's 5 marks here.
Oh, okay. Wow.
It's usually the compulsory question in your exam.
Is there, if I may ask, is there a trick to knowing based off history what determines the compulsory question? And if you don't attempt the compulsory question, or if you start attempting the compulsory question but you don't finish, does it affect you or you have to finish? Is it like how we used to do it back then in school, where this is compulsory, but then you can attempt, you have to attempt it because it's compulsory, but you can, of course, attempt other ones, and then
In fact, maybe because you entered the class late.
Oh, okay.
Maybe
You
because,
talked about it.
yes, I actually spoke about it. I won't even expect, I won't expect that you would do this first. You might even want to do it last. And I mean, so for me, a lot of you might not be able to do all of these adjustments. That's the reality. If you're able to do it, fine. Even if you're unable able to do, you might not be able to do it correctly. It doesn't really affect much. It doesn't really affect much for you. What is important is make sure you prepare all of these statements. It gives you a lot of mark. If you just, even if you don't consider most of this, or you just do the little additional information you know, out of these 25, you can get close to 20. I will show you when I'm done with it now. I will show you how marks are allocated. I would show you the breakdown so that you can understand what I'm saying. So don't be bothered that this one you might do it, just do scanty work. You find out that they will call you that you have one price. If you do the other ones well, you might not be able to do it so perfect, and you might be lucky because they repeat additional information. That all the additional information you are seeing, they are the ones you have practiced before. So, like I promised, you are going to solve like 2 more or 3 more. I can only promise 2 anyway. So then you can solve more yourself. So you have a lot that you can solve, and solve it within the ICAN pack. Don't start looking for some funny questions up and down. Solve it within the ICAN pack, your past questions. Solve that. To a large extent, it would make you familiar with most of these things. Okay. So the last additional information, which is additional information 6. So this talks about on 31st March 2024, Ayoka Foods factored trade receivables with a book value of 15 million to Anike Limited. Ayoka Foods received an immediate payment of 13,050 and will pay Anike Limited 2% per month on any uncollected balance. Any of the factored receivables outstanding after 6 months will be refunded to Anike. Ayoka Foods has recognized the receivables and charged 1.95 million to administrative expense. If Ayoka Foods had not factored these receivables, it would have made an allowance of 900,000 against them. Okay, this is also on financial instruments, and it's talking about the recognition. I can remember I taught you guys, and I gave you a similar scenario where they sold receivables and all of that. So in this case now, if you remember the principle, to derecognize a financial asset, 2 conditions must have happened. Your contractual right to cash flows must have expired, and you must have transferred substantial risk and reward. In this case now, you will see that this guy factored his trade receivables, meaning he sold his trade receivables with a book value of 15 million. And he received an immediate payment of 13.05 million. And he's going to be paying 2% per annum on any uncollected balance. Any of the factored receivables outstanding after 6 months will be refunded to Anike. Any of the factored receivables outstanding after 6 months will be refunded. So this is saying that if Anike, so he sold his receivables and the guy gave him 13.05 million. But they are now saying that if the guy is unable to collect his receivables, if he cannot recover those receivables, that Ayoka will still pay him back. He will refund him those receivables. Like I explained to you that I've taught, that means that Ayoka has not transferred substantial risk and reward. Okay. And they now told us that he has derecognized the receivables and charged the difference as admin expense. No, he cannot derecognize the receivables because it hasn't met the criteria for the recognition of receivables. He cannot derecognize the receivables because he hasn't transferred substantial risk and reward. He still has exposure to credit risk related to that receivables. Because if Anike is unable to get or recover those receivables, it will recourse to Ayoka. They are still coming back to Ayoka. So he cannot derecognize the receivables. So we need to recognize it back. So what's happening here is this, we need to make some adjustments here. Number one is that they told us that they recognized the receivables. We need to recognize it back. Number two, this 13.05 million that is recognized as that he used to cancel out the receivables. No, it cannot cancel the receivables. It's going to recognize it as a loan. It is a loan. And also, this 1.95 that's recognized as admin expense, no, it's not an admin expense. It is in fact a finance cost. But this kind of finance cost is not a finance cost that you recognize one-off. It's a finance cost that is recognized over the period of that arrangement. So we need to remove this 1.9.5 from admin expense. And those are the adjustment that needs to be made here on these trade receivables. So the trade receivables cannot be recognized because Ayoka PLC has not transferred substantial risk and reward. Is still exposed to risk, to credit risk. So what we're going to do is that we're going to recognize it back, the trade receivables of 15 million. Number two, we are going to recognize the amount received as a loan, the
Okay,
050, and also we're going to remove the admin charge from the admin expense of I think 1.95 million. Remove it from the administrative expense. And that's what we're going to be doing here. Okay, and that's the end to this additional information. So now we can now prepare. And they said they would, I can see here that it's, if Ayoka had not factored, they will have recognized an allowance, made an allowance for 900,000. That's what we call allowance for receivables. So you recognize an allowance for receivables of 900,000. So this will go to P&L. This will go to admin. So you're going to add to admin and reduce from receivables. That is what we're doing with that.
Hello, sir.
Yes, Luco.
This 1,950 that we did recognize from that admin charge, where are we going to do the double entry? Are we just going to remove it and treat it as
Yes, no.
finance loss?
No, you're not treating it as finance cost. You cannot recognize everything as finance cost this year. So you are just removing it from admin. It should not be an admin expense. That's what you should do.
Okay.
Because they didn't give me further details on how to spread it and all of that. I don't want to double into that.
And that's by fear that since there's no further details, we just continue and ignore the other side. Okay.
So what's my revenue? Now we need to, somebody can snap this and I don't know. We'll be calling the figures for me because I need all these figures now, but it's okay. 509,470. 509,470. Then what's my cost of sales? There were some adjustments to cost of sales. How much was my cost of sales? 311,620. 311,620. There's some adjustment that I made in note.
Sir, check that revenue, sir. You said 509, not 507.
Thank you, Mr. Jamil. Yeah. So that's why I said somebody should snap and be calling the figure. Otherwise, I'll just write one figure for you. You go and deal with that.
Okay, sir.
So the inventory, how much is the inventory? We made, you said we should reduce our cost of sales with 4,950. Reducing our inventory by cost of sales by 4,950.
Depreciation,
Also,
depreciation of non-current assets is to be charged to cost of sales.
Okay, thank you. Yep. So there's a depreciation of 3,750. And also there's a depreciation here of 15,000. Okay. So 3,750 plus 15,000. So how much is that total?
Three two five 420.
325
420.
420. So what's my gross profits?
184,050.
184
050.
so 50. Then I don't have any other income, but I have distribution costs. My distribution costs here is 41,250. Distribution costs. $41,250. And there's administrative costs. How much is the administrative costs? 46,050. 46,050. And for my admin costs, there are some adjustments I need to make here. My admin costs. Let me see. Okay, this is just this impairment of 900. And this admin charge I need to deduct. So I'm adding the 900. Deducting the 1,950. So what does that give us?
45,000.
45,000. So what's my balance?
$97,800.
So what do I call that 97,800? What do you call it?
Profit from operation.
Sorry?
Profit from operation or profit before interest.
Okay. Profit from operation or profit before interest and tax. You say 97,800, right?
Yes, sir.
Okay. Then afterwards, you have our finance costs. And we already established that our finance cost is the figure we computed in our P&L. In our here, when we're doing the convertible loan notes, this 4272 that we did here, this 4272. So how much is that? We'll have
93528.
profit before tax, 93528. Then my income tax expense for my workings for is 34,125. 34,125. So what do we have as our profit for the year?
59403.
Five nine.
403.
Then in my other comprehensive income, I have evaluation surplus, which is how much? Which is 22,500. So what's my total comprehensive income? What's the total?
It's 1903.
It's
903.
It's 1903. Okay. Then I will go to my statement of changes in equity. I have my share capital. And let me go to my trial balance to know which items go to equity. Okay. The first item, share capital, I have retained earnings and this other component of equity and evaluation surplus. Okay. So my balance go forward. My share capital is this. My retained earnings, I work back to 10,005 in my note 1. My other component of equity, my evaluation surplus. What's the addition of these two? 84,000 plus 10,005.
94,500.
Then the equity component of that convertible loan notes, we got it as how much? We got it as 2284. Two two eight four. 2284. Then my evaluation surplus, we solved it as 22,500. Then my profit for the year, this is that evaluation surplus that was here. My profit for the year, 59,403. Then dividend. Let me put this here. My dividend paid
8,400.
so total. This is 84,000. So how much is this?
This one, 503.
61503. This is 2284. How much is this?
172, 172.87.
172.
172.87.
172. Like this.
No, 170.287.
Okay.
Correct.
Then my statement of financial position as at year ended 31st March 2024. Assets, non-current assets. I have my freehold property. How much was my freehold property for my workings? I got it as 11,250, and my plant was 60,000. 11,250, I think, yeah. 11. And my plants. So what's the addition of these two? 111. 111. No, 116,250. 116,250. Please, you can go ahead and ask your question. Other people give me figures for this.
One 250.
176,250. My current assets, I have my inventory. And for my workings, I got my inventory as, I'm up, ask a question. As 58,950. My receivables. How much was my receivables? 7650. This 7650. And there was an impairment of 900 that I noted in the last additional information. Yeah, this 900. Allowance for receivables. So 7650 minus 9. And don't let us forget the receivables that we need to add back that they recognized. So how much is that?
84,750.
84.
750.
750. So how much is that? What's the total?
143,700.
143,700. So what's my total assets?
319.
960.
319,960.
950.
Okay, 950. Then my equity and liabilities. My equity first. I have my share capital to be 84,000. This one I'll majorly dub them from here. This 61,503. Then other component of equity. That's 2284. What was my total here? We got 170,287. Under my non-current liabilities, I have the 8% convertible loan notes. And we got the value as what? Where is the workings? We got the value as 43,388. 43,388. And there's the deferred tax. Deferred tax. What's the closing deferred tax? 10,125. So how much is that? What's the addition of the two?
53513.
53513. My current liabilities, I have my trade payables. How much is my trade payables?
36,750.
36,750. Then there was a bank overdraft in the trial balance. Can you see it? There was a bank on the credit side. There
Okay,
was a bank on the
17,250.
17,250. And the current tax that we did, the one I said will go into the statement of financial position, this 29,100. Then remember that loan, that money we collected from the factor, that factoring of receivable. This 13,050. This 13,050. So how much is that in total? How much do you have?
96,150. 150, not 450, sir.
So what's the total?
Three one nine
950.
Sorry?
319
190.
950.
Okay, so
How are
Balanced.
you, how are you adding the liabilities?
what are we adding liability? We had equity and liabilities together. That's the other side of the balance sheet. You had equity plus all the liabilities together. That's how it works. So in our case here is the same. In your case, it might not be the same. It doesn't really matter. When you get to this point in the exam and you see that it's not balanced, don't even bother yourself. Don't bother at all. If you try to do that, you're in trouble because you just waste time unnecessarily. You think you have made a mistake. You think. Just move on. So if it's not the last question you're solving, just go to the next question. Just try to do your best under a timed condition. Okay. Now, this is the first question I'm solving unpublished. I've promised you 2 more. So, which I will, of course, I'll fulfill. So let me show you the marking scheme for this. What is it? The marking guide.
So are we having this recording as soon as possible?
Yes, you will have it as soon as possible. At least I'll share the notes now. Maybe you can look at the solutions first. So if you look at the marking guide, then, so this is the A part, this is the B part. So they said prepare statement of profit or loss and other comprehensive income. You see that the statement itself is just stating the title of the statement. It earns you mark. Half is a lot. Determining the cost of sales is 3 marks. Determining PBT is 3 marks. Determining taxation and profit for the year is 3 marks. Determining gain on revaluation surplus is 2. Stating the total comprehensive income is half. So determining, which means that the guy is going to go all the way for you, check your workings, and mark all your steps. So like that cost of sales that we did in our own case, that I just intentionally, ordinarily, if I want to do it, I will just go and do this in my notes, in my workings. But I just want to I'm putting myself as if I'm in an exam and I was doing this. So the guy is going to give me 3 marks for all of this. Okay? Which means that if I forgot to include something, that means I will not get the whole of the 3. I will still get some marks. Even if it's only this one that I put, maybe I'll get 1. Something like that. It's not like I will not get anything. I will get something. If you look at the statement of changes in equity, stating the title, I get a mark. Stating the opening balances, those opening balances that I get a mark. Determining the equity components that I did, that's 2, 3, whatever, I get a mark for that. Stating the dividend, that dividend that we had to separate If I hadn't separated it, my account is still balanced, but I would have lost this mark. Stating transfer to evaluation, okay. Oh, bad. How can you stating transfer? I mean, they told us that you are not transferring, so this must have been a mistake. Stating the closing balance of component of equity. This also. Now, let's see the statement of financial position. For statement of financial position, stating the title, determining the non-current assets, 3 marks. So I will share this with you. My point is that it's not about, for us, it's not about the figure per se. It's not about my final answer is correct. No, it's about the systematic process that you do. And in all you do, make sure at least you prepare your statements. Because from there, the guy will walk through your workings, give you ticks and ticks and ticks like that for each of those steps that you go through in the exam. So the aim is out of this 25, at least minimum half. If you can get half, worst case, and the way to get half is so straightforward. Just make sure you prepare your statements. And if there are any additional information that you can get, that would also help us. That would also help us. Okay. So I'll see you guys on the next class. Yes, because you have another class now. We have overspent our time. Thank you very much. See you. Bye.
Thank you very much, Fosu.
Yes.
Thank you, sir.
You're welcome.